Welcome to Java. Thank you kindly for joining me. It's October 7th, 2024. It is also Monday. So I hope you all had a wonderful weekend. Thank you so much for joining me again. This is going to prove to be likely a very wild week. We've got some very interesting things going on. First off, with the solar flares, we've had quite a bit of reports of aurora borealis. Hopefully, you've been able to catch some of those. A bit of mild disruptions between some of the radio frequencies and others. Now, I would just like to bring up the fact that October 7th is the anniversary of basically what has kicked off this war in Israel with Hamas and Hezbollah. And overnight, there were more strikes there. So, with this, that is affecting the price of oil as it is increasing, again, still spiking toward the upside. And we've got a few other things going on with the markets. So, let's get started. Starting with a favorite risk indicator, which is the MMRI, it is still increasing. So we're in high risk territory. And the more significant thing of note is that the US Treasury note has spiked. So the yields on this gone up significantly. We watched a lot of money flow out of basically a lot of other areas and go into the stock market on Friday. So with this, we're strong into the grade territory, and the number right now at 74, borderline extreme grade. So this is showing a lot of retailers for the stock market basically still pouring their money in, gambling, if you will. With this, we've got cryptocurrencies also rising in price, showing the money flow also going to cryptos as well. So we've got all of the larger ones spike as the market staying upbeat after what they're calling better than expected jobs report. Now, not better than expected jobs numbers because that will be revised, but the report came out strong. And so basically, this could prove to be weaker, less chance of the Fed cutting as large as they did before, but the market is loving this at the moment. Now, Friday, there was a strong close, stocks strongly in the green. However, we are looking at futures below showing weakness. So it could be a chop to a weak day for the United States stock market. So we are looking at a weaker opening. The European stock market was lower. Asia is continuing a rally on continued easing. Now, we'll talk about that in a moment. Basically, between the housing, the massive amount of money they poured in for the loans was not being utilized, so it had to flow somewhere, and the bulk of it flowed into their stock market. So there's almost a panic buy fear of missing out in the Asian stock market, mostly Chinese ADRs. So we've still got these war concerns, spiking oil, as well as the volatility index. Now, if you notice on Friday, the volatility index hit 11.24. So that is also like basically a fear gauge. So we're watching a swing back with these markets. And as I said, a bit weak on the open. So with the actual spending and consumers, what we're watching is anxious Europeans are hoarding their savings as United States consumers are boosting the global economy. So United States consumers have been basically the drivers of the economy, the global economy, for quite some time. They're just kind of pointing this out now, but the divergence right now is basically Europe is kind of hunkering down first and saving. The US consumers basically is another form of how inflation is exported, as basically American tourists and shopping are raising prices abroad. So if you think about how that money is flowing as well, and we're seeing this on both sides, not just Europe, but also in Asia. So we've got the Dow jumped over 300 points, watching Tesla, Amazon, Netflix. They did very well, so that kind of pushed things over the edge. I want to bring up a calendar we're looking at today. Fed Governor Bowman speaking. We're getting consumer credit. And then I'm bringing up tomorrow as well because we're getting basically Fed governor speaking over in Europe, as we'll be watching over there. and the US trade deficit prior to the market open. Now, this has been very downplayed in the market in the United States, and I think this will become increasingly important as we're watching some of these carry trades unwind. In particular, the largest one is with the yen in Japan. However, this trade deficit is massive between China, and we're going to watch this also hitting the markets in a different way. So, with this, watching basically a flow going into risk off assets. What do I mean by that? Gold and silver are both on a boost. It appears that silver has broken above the $32 range and it's retesting it, could go higher from here. And we've seen this in local Costco's while they're selling their gold bars. They basically can't keep them in stock. So we're watching the bullion just kind of, they're saying, flying off the shelves because gold has risen significantly this year. And this is basically because people are looking for places to put the money before all of this inflation just basically silently disappears all of their gains. So, with this, we've got oil turning higher as they're awaiting Israel's response to the Iran strike. Along with this is the convergence. Basically, if this calms down, oil will drop because demand has dropped as well. So, if they have the supply increase, demand going down, that will drag the prices down. So, just urging caution on oil if these tensions do abate. So, I've got three stories I'd like to bring out together to kind of clarify this just a bit. We've got key US yield hits 4% the first time since August on the Fed rethink. Basically, they don't think the Fed will cut rates as much as they're saying. So, increasing yield, bond traders buckling up for what they're calling no landing scenario. Basically, stock markets just continuing higher after the jobs numbers came out. So, money flowing into stocks, bond yields, out of the fear trades and going into risk on assets. So this will put weakness into the precious metals such as gold temporarily. Along with this, we've got Goldman cutting probability of the United States recession in the next year to 15%. So this is basically saying that they expect that there will be continued easing, continued printing, and so that we basically will have a lot more money flow out there. Has to go somewhere. They're taking it out of the risk of assets because they don't have as high returns, throwing it into the stock market at least throughout this next year. Now, I'd like to bring up this story is China. China's stock skepticism getting louder as world beating run extends. Now, what happened with China? Basically, their government pumped out a lot of loans to banks, a lot of monetary easing in order to spur the people to purchase homes, to get loans to buy all this other stuff. But what happened is that the consumers they're holding off not getting home loans yet. So all of that money had to go somewhere. So the banks basically started putting the money into stocks of their own equities, which boosted their stock market tremendously. So we're going to watch a similar thing happen in the United States unless there is a swing differently. So we're watching the inflation play in the stock market continued. Stocks going up. We're going to watch the increase in price in assets, massively inflationary. And if they're not cautious about this, this could definitely spiral out of control very rapidly. So with this, we've got Chinese hackers breaching AT&T and Verizon networks. They had wiretap data theft, putting the United States national security at risk, is what they're saying. Basically, hackers, but a lot of this has been going on. So watching AT&T and Verizon, we know how these can basically cause a problem with a lot of the networks, not just communications, but this could be a bring down. What am I talking about? World Economic Forum is backing a sandbox first approach for DeFi adoption. So decentralized finance is what they're talking about with DeFi. They are recommending use of regulatory sandboxes to basically check out how the reactions are and the how that's going to work out for this decentralized finance innovation while mitigating risks. Well, to be honest, they are not interested in DeFi because they can't control it. What they want to really see is what the adoption plan is and who is going to go along with it. Now, you can see from some of their other comments that they're saying the success of regulatory sandboxes highlights the potential for collaborative innovation in DeFi. Well, collaborative innovation is kind of working against it, but what we really want to see is the backdrop of this. Now, they have divided this up into several areas. They've got the United States, the UK, Switzerland, Gibraltar, the European Union, the UAE, Hong Kong, China, Singapore, and Japan. So these are the major areas basically that they're getting for these adoptions. And really what this is getting ready for is central bank digital currency, but they're going to call it DeFi even though it is not. So misnomers, be ready for this, be ready for the misinformation coming out about this. Along with this, we've got Japan's Metaplanet. They're one of several making a $7 million Bitcoin buy, bringing their holdings to over $40.5 million. Now, we've got all of the major players, including BlackRock, is one of the largest holders of Bitcoin. So trying to stay outside the system themselves and keeping the people from purchasing this. In the meantime, they're going to be pushing stable coins, if you will. So don't do what they're telling you to do what they're doing instead. Not financial advice, but I am working into Bitcoin myself, not the stable coin so much, although there is a large amount of money to be made in the trades there, just urging a bit of caution. And I also want to point out again, I'm speaking about this over again because I really think that this particular thing right now has the shock value that they need. They've got another state launching this campaign against it. It is growing in the news. They're pushing this. So urging caution on this. We've got a lot of the health companies, if you will, if you can call them health companies, I use that in quotes. However, the ones that are basically benefiting off of this are all at a low right now. So it wouldn't surprise me if they all get contracts very soon or if this is pushed further. So I just want to make you aware of this. And with this, it's all I've got for you today. Prior to the market open, I hope that you have a wonderful day in general, green on your trading day if you're going to be in these markets. And until I see you again, my friends, stay free.